All right, let's now bring in Chief Executive Officer at Weaver Investment Management, Owen Khumalo, to weigh in on the South African Reserve Bank's Monetary Policy Committee announcement on interest rates. Mr. Khumalo, thanks very much for joining us here on SABC News, sir.
Thank you, Flo, and good afternoon.
Well, is this what you had expected, a 50 basis points hike? Some were expecting half. Where do you stand in all of this?
Yeah, I think it was the surprise that the Reserve Bank Monetary Policy Committee decided to hike rates by 50 basis points. That was the market consensus. And I think it's also reflected in the way that the MPC members voted with four voting for the 50 basis rate hike and only one member favoring the 25 basis rate hike. Yeah. Given the headwinds that the economy is facing and the markets are facing, there was no doubt that 50 basis points rate hike was the right way to go.
Of course, we know that our challenge at the moment is the issue of economic growth. Some commentators saying that this interest rate hike is severe and perhaps harsh on a socioeconomic level. Is this something that you would agree with?
To a large extent, yes, but remember, we are in a unique situation as an economy in South Africa. We've got the triple factor that we're facing of higher interest rates, rising interest rates, but also rising inflation, and couple that with high unemployment figures plus slow economic growth. So we're coming off a low base of lower interest rates. So the only way to try and put brakes on consumer spending and make sure that we bring inflation down is to hike rates. So I don't think it's an aggressive move to make, because the Reserve Bank is caught between a rock and a hard place. If you let inflation run by keeping interest rates low, we face a situation where we could go into stagflation as an economy. And as the Reserve Bank governor pointed out, we don't want to get to that situation, because when you have runaway inflation, or they call it recession inflation, it's very difficult to then rein in and bring it under controllable levels.
Oh, well, you raised an interesting point there. You're talking about putting brakes on consumer spending. But I would argue, as a consumer and as an ordinary South African, that we're not necessarily spending on luxurious items or luxurious things. It's the basics. We're really at the point where we're really just fighting to survive. So what is the logic then behind that?
You are quite correct, but what I'm referring to is the ease or the lower cost of accessing credit, or the cost of borrowing at low interest rates that we've been experienced to got accustomed to in the recent past. That is what fuels expenditure, because it's easy to then procure credit. But you're quite right. In the immediate term, in the near term, as consumers, we're going to have to bear the cost of servicing debt on personal loans, credit cards, car finance loans, and housing mortgages. But as an economy, in the long run, that will benefit us. Unfortunately, yes, in the short term, we have to contend with higher costs of servicing our debt. But we need to bring the spending down a little bit to cool down the inflation numbers that we're facing at the moment.
All right, Mr. Khumalo, we appreciate your time, and thanks very much for weighing in on this for us.